Let's bring in today's panel. We got Jonathan Hoenig from Capitalist Pig Hedge Fund and Scott Martin from Kingsview Asset Management. They are both Fox News contributors. Scott, I was hoping and praying that with the Trump era, we could avoid these so-called oracles at the Fed and all the trouble they've caused. They've certainly caused trouble this week. I'm reading a piece in Market Watch. It says, it's quoting a Dartmouth College economics professor saying they're just chasing shadows, referring to the Fed. There is no inflation. There is no wage growth. What do you think?
David, I would agree with you in large part. I mean, there is some coming on, but it's definitely not this panic area where all of a sudden the Fed's got to go on this crazy interest rate hiking pilgrimage. But the reality is this. I agree with a lot of the things you guys were saying at the beginning of the show, which is it's probably more or less a good thing that rates are starting to tick up here and get back to normal because, frankly, if we were still printing all this money, if we were still racking up, I know we're still racking up a lot of debt, but just debt unwillingly and not spending it on, say, the American consumer or the American business, my goodness, this would be a lot different of a picture. So I take days like today in stride. Given what we've been through this month, this is not that big of a deal. And I would get the shopping list ready for another day like this if there's cash on the sidelines and things you want to buy.
Well, that's an optimistic view of the thing. Jonathan, what made me pessimistic yesterday listening to Powell was when he used that term overheating. Melissa, it kills Melissa and me when we hear that term. Because overheating means you have too much growth. The economy is too good. I don't think the economy can be too good.
Yeah, I mean, there's an unlimited amount of wealth that can be created. And when it comes to the Federal Reserve, an unlimited amount of wealth that can be destroyed. And to your point, the market, at least the stock market, doesn't seem to be buying it. Now, 2 days in a row, the market has closed right at the lows of the day. And what worries me is the internals, the breadth. About 150 new 52-week lows today, only about 85 new 52-week highs. So, yes, Apple, yes, Boeing, yes, Amazon doing well. But a lot of stocks don't seem to be buying what Powell is selling. And given the fact we had a 4% drop, as Nicole said, the worst drop in 11 years, this is reason, I think, for concern.
Well, Scott, I'm wondering, clearly Powell affected the market. I'm wondering if the market could affect Powell. Do you think the fact that the market's down may spook the Fed into saying, well, maybe we'll just do 3 hikes instead of 4?
It might, David. I mean, these days with the Fed, it seems like they can be pushed one way or another given anything the market does. But here's the thing. We've got 7 meetings left this year. And let's say you do an interest rate hike at half of them and flip the coin on the last one to see if they hike or not. As long as data is still good, to me, it's good work that the Fed's doing hiking rates because we need to get back to some semblance of normal. And don't forget, when rates get back to, say, 4% on the 10-year note, which is still ways off, the market's going to look pretty attractive versus maybe some of those rates, too. So I think that's fine, given that we might have some trouble in the meantime.
And very quickly, Jonathan, we got those GDP numbers. They disappointed. That also kind of doesn't ensure that the Fed's not going to raise rates 4 times, but it kind of indicates that 3 is enough.
Well, David, if the inflation starts rolling in, as many believe it will, then Katie bar the door when it comes to rate hikes. And I'll note quickly that among the few securities actually doing well today were those commodities, grain inventories up, I should say grain stocks up. So this is a story that continues to change. Most investors should take guard.
Jonathan and Scott, I'm glad February's over, guys. Thank you very much. Appreciate it. Melissa.